This is Eric Mwatha with Mwatha.com for the first week of January 2012. Let's take a look at what the market did for the trading action for the entire year of 2011. You'll see that the Dow managed to gain about, let's see here, about 5%. The Dow was the highest gainer in terms of the major averages, 5% for the year. You know, really given all the events that took place in 2011, that's not a terrible return. So 5% after all the volatility is an incredible performance for the market. Now, on a weekly basis, what we see here is that we were watching to see whether the market would hold above 12,231, and we see that it closed below that last week of 2011. So the fact that it's now back below that former buy point short term tells me to look for this market to start the year on a week-to-week basis on a down note, just because it's not holding this level now unless it can recapture that level and continue creeping higher. But for now, given what we see here, I think this is showing resistance. This area here is confirming resistance with this week's slight move to the downside. Now let's take a look at the Dow from a daily chart. And what we see here is quite frankly, not much change from last week's close. We're trading in that narrow range there all week, up and down, up and down. This happens to be an area here where we've been expecting the market either to blow out of that with a fierce rally or stall. And right now, I mean, when I look at this, it's it's hard to tell. Market's trying to hold its own, but it's back below this level that we were watching. So given that, we're just going to have to default to saying that the market looks to be setting itself for a move lower. Now, if we take a look at the daily RSI on the Dow, you'll see that the brown line on the RSI connecting the highs is exactly where the market seems to be stalling right there. So there is some RSI resistance which might confirm or might be confirming that the market is not going to be moving higher. Now, any breakout above the RSI resistance line, for example, if we come into the first part of the year and we see the market blast out of that brown line, which is connecting the RSI tops, then you might say that the market wants to move higher and you want to play the upside. Now, as far as 2011 returns are concerned, the NASDAQ was down about 1.8%. So down about 1.8%, which is, let's call it unchanged. Pretty much incredible given all the volatility. At some point in the year, of course, we started the year here. At some point, market was making nice strides, and then at some point, the market was, trading significantly lower. But we ended the year exactly close to where we began the year. So it's incredible, actually, when you look at all the possible scenarios that the market had for the entire year. Take a look at the weekly chart for the NASDAQ. The RSI shows that there is some kind of RSI resistance if you draw a straight line connecting the highs. Now, this is the strangest return. This is the S&P 500 weekly chart, and it's unbelievable because we started the year with the S&P 500 trading at 12,257 point. Let me look here, 0.64. That's where we began 2011, and we closed the year 2011 with the S&P 500 trading at 60. So now I think this is some kind of a joke on all the traders, because all they are saying is despite all your trades, all your predictions for a bearish market, all your predictions for a bullish market, nothing happened all year, right? So the joke's on us traders. Anybody who trades, joke's on you, because this is definitely the work of manipulation. It's no other way to look at it. All right, that's just self-evident. So only 0.04 difference for the entire year. I mean, come on now, people. Now, if we take a look at the weekly chart, you'll see that the S&P 500 is struggling to move above these top lines on the weekly price chart. So there's some resistance here, and that's how I'm looking at it. But yet again, let me just stress that this return for the S&P 500, this unchanged return, is absolutely a joke. The airline index here, and I personally was thinking that after we had seen this recent resistance here, that the airline index was going to be predicting a market that wants to go down. And at least as far as the airline index is concerned, that seems to have been the right call. And if you went short some airline stocks, you're probably seeing some nice returns as of right now. So the airline index was, already hitting this resistance level here and seems to have been stalling, and we've been moving low over the last couple of days. If you take a look at the same chart on the RSI, you'll see that we had formed a double top on the RSI here, and that resistance based on the top lines, that line confirmed resistance here, hence the airline index and the airline stocks have been moving lower. Now again, the airline index from a weekly perspective, and you'll see that we could not move above this area here. This pretty much we've been trading in that narrow range, and so when we came in contact with the most recent top range of this area here, it just made sense that we stalled, and that's what's been happening. So we'll see how the year begins, but for now, that's short term we see resistance on that part of the market. This is now the IYR, the real estate ETF, and you'll see that this yellow shaded area here, somewhere around there, seems to be, let me draw that again, but the yellow shaded area seems to be where been finding some resistance like we did here, and again recently we are finding resistance there. And this happens to be a critical area because this was a former break. Once we broke below this level here and went down, we've hit this level once and a second time, and we'll see whether we are going to trend lower from that formation. Also, if you take a look at the RSI, the top lines on the RSI, you take the high of this RSI line levels, and you'll see that we are exactly where you'd expect to find resistance. So that's why I'm personally looking to see whether this market has hit short-term resistance and we might be trending lower. Now, the opposite scenario, the bullish scenario, is for a breakout, and a breakout will mean that the market has changed its intentions. A breakout above this level here would suggest that this market is really setting up for a strong beginning of 2011 or 2012.